from OBS.
Okay, okay. Open the meeting link on Google Chrome and you can easily record the whole screen using Google Chrome extension.
Okay, I will check it.
Okay, so when you guys are set up and ready, so then I will start.
Oh, okay.
Let's open trading view and so let's do some quick recap of yesterday's session. And my voice is clear. Hello, guys. My voice is clear.
Yes,
Okay,
please.
okay, okay. So we will do some quick recap of yesterday's session. And so yesterday we learned basic structure of RTM. This one was first one was rally base rally. Okay, so this we call rally, and this one was our base. We call this base, and this one is rally. On bearish side, we call this drop base drop. So this one was our drop, and this base, and this drop. And then we had rally base drop. This is rally, and this one is base, and this is drop. You can see these two structures are continuation structure, and this one is reversal structure. And next one, drop base rally. Drop, this is base, and this is rally. Okay, clear? If anyone still have any doubt in these four basic structure, you can ask once again. If not, I will delete them and carry on. I think no one have any doubt, so I will delete this And then we studied about FTR and FL. So I will draw the FTR and FL quickly, and I will show how FTR is formed and then how it convert to FL. I see some of you guys are drawing the FTR and FL in wrong way. So they are small little bit things. So I will explain them again. Okay. So price moves like this, pulls back, pulls back. What does this mean? There is some resistance which is forcing the price to go back down, right? Here we have some resistance. But what price does after pulling back, price goes up again, right? Pulls back and then goes up again. So here at the resistance level, here we have resistance. Okay, price came back, makes a low here, low or support. Low, we can call it low or we can call it support as well. Due to this support, the price went up again and creates a high here. Okay, then pulls back, came back and goes up. This is where the price goes up, came back, but did not came back to this support level or S level. So we call this fail to return or FTR. This zone is called FTR. At this point, this zone is FTR. We call this FTR. Then in future, if price here the price created higher high, right? In future, if price comes back again here in FTR zone, this box, orange box is a zone, not just a line. If price come back till here, here or here, but it should not go below this orange box. If this goes below orange box, this will not be FL. Price should come back in this zone and should go up again and cross this higher high level. This higher high level must be broken, and this crossing is valid even if price cross by 1 pip or 1 point, but it should cross. So now the price cross this higher high. Now this FTR converts to FL, right? FL. Now price this FTR converts to FL. Now this is FL, and this FL is valid until this is not broken to downside. Doesn't matter if price comes back how many times. Price may come back again, goes up, come back again, goes up. That doesn't matter. Until the box is not broken to downside, this is valid, right? So now you have understood how the FTR is formed and how it converts to FL. If we talk about downside, then price comes down, goes up, and this is where the support is created. This is a support. Price goes up, creates a high, high, or we can say this resistance. Then price comes back again, cross this support level, pull back, and goes down again. Now FTR is formed. Call this FTR. When price, this formed, and this what is formed here? S support, or we can say this low. Here we, this is the form low and this is lower low. So we will denote this low and this as lower low. Price goes back again in this zone, can go here, here, but should not cross this box to upside and come back again. Should cross this lower low level here. If this is cross, so now this FTR will convert in FL. So FTR is not converted to FL. It doesn't matter how many times price goes here, comes back, goes here, comes back, but this this box should not be broken to the upside. Until then, this will be FL. Once this is broken, this is no longer a valid FL. Fine. Till here, we completed yesterday. If anyone still have any doubt or question, please ask again. Okay, okay. Yes, it can hit FL level at hundreds times, thousands times, doesn't matter. This is valid FL until it is broken to the upside, right? This upside level, it is the box. It has lower level and upper level, right? This should be broken to upside to make it invalid or swap it. Okay. So now today we are going to study swap FL. Fine. We will continue in this structure so it will be easier for you to understand. Okay, fine. Okay, so let's shift this here and focus on here. First we will discussing about for the bullish side. Okay, so and we will shift. So now this is FL, right? So we don't need to write full thing. Only if we write FL, that is enough, right? FL. We shift it here, and this is now this is FL. So in future for swap FL, now we are going to study swap FL. Swap FL. Here I should denote the topic swap FL. Okay, and size 28. Okay. So when price comes back and breaks this FL to downside, comes here, pulls back and comes down again, right? Comes down, make this low, break this FL, make the low, okay, and then makes a high, right? And then again makes a lower low. So now this zone, low to high, this zone, we will change its color, uh, right? So this purple box will be called swap FL. We call this swap FL, right? This box will be called a swap FL. And this swap FL can be this pullback, the price came back, break this FL, goes bit up, came down, this is swap FL, and this can also go up till here, but it should not cross to this higher high. This higher high was formed here. Price pull back till here, and came back again and breaks this low. This full zone will be our swap FL. In this case, this will be our swap FL, and this high will be shift to here, right? This is also our swap FL, right? So swap FL can be this size or this size, both of sizes swap FL, right? Now let's see at bearish side. Shift it here and shift this one here. Same thing here. Now this is FL, so we can write only this as FL. And this one is our lower low. So when price goes up, break this box to upside, pulls back, and then goes up again. This, and so a box will be formed here, a zone is formed here, and this will be called swap FL, right? Why this is called swap FL? This is swap of the FL. After breaking of FL zone, this box is created, so this will be called a swap FL. So here high is made, and here higher high is made, right? And again, like that, this box, this pullback can be a small or can be a big, can be till here. So in that case, our box will be like this one, right? So this is our swap FL. Okay, so anyone have any question related to swap FL? Please ask, or we should move forward.
No question.
Okay, no question. Okay, fine. So now we will start to learn about uh, DP, decision points. So what are the decision points? Decision points are the places where market movers make the decision to break a level, right? This is where the market makers make a decision to break the level, and those decision points are very important. Why? The decision was made there to make the price go down or go up. So decision points are significant areas where demands or supply stays. So whenever price goes to those decision points, we can trade there, right? Okay. So I'll changing the heading to decision point, and I will change in structure. So first we will focus on this one. Okay. I will delete FFL, this one. Okay. So now think the price was here, right? So FTR was formed, FL was formed. So now when the price comes back, this is our FL, and price comes back here, pulls back. So whenever price comes back to this FL, so now here market movers has to decide if they want to keep the price push back again to upside, or they want to break the price to downside, right? Whenever price comes to here, here means give attention to this box and its upper level. This upper level, whenever price comes down and cross this upper level a bit, decision makers has to decide if they want to keep bring the price up again or push it to down area, right? So this will be our decision point. uh, this is our decision point. I will change the color of this. Yes, this will be our decision point, DP. So they decided to break this FL and go down. So in future, whenever price goes to, so here this made an low, right? So this one is broken, and whenever price goes to this decision point, right, very high probability it will fall again, right? So this will be our trading zone. It will be like our trading zone, and we can short here. Here it will be our entry, and here will be our stop loss. This is conservative stop loss. Aggressive stop loss and conservative stop loss will be much higher here or here or here and above the next one. And our target will be, first target will be this low. And whatever we will study in future, so we can adjust our target as per that. Okay. So you can see how this DP is traded and how this decision point is created. Okay. And this is also possible when the price comes here, makes a decision point and pulls back, but reach only here and falls back, right? Pulls back, goes up, could not reach to decision point and fall down and create another lower low. But in this case, in future, when price goes back to this DP, there is very high chance it will fall back again, right? Did you understand, guys? The DP, importance of DP. And another scenario, yes, and another scenario is if price goes up and to DP, fall back here, goes up to DP and came back here, here, and came back here, then what this happened? The orders will be transferred from DP to this zone. So this will be our another zone. And what this zone will be? We have studied it. What is this zone? Can anyone tell? What happens? What happens when this FL is broken and pulls back and
So,
price down? This is swap FL, right?
so
Yes.
yes.
This is swap. This is swap FL. This will be our swap FL. So now you are getting how the market structure is created, how these basic elements are seen in the market, right? This is swap FL. When the swap FL, when the price after breaking this FL, when the price goes back to the DP, this swap FL is also tradable. So imagine if price falls till here after going back to DP, came down. So this swap FL is created. And when the price goes back again to this swap FL, this swap FL can also be traded. Price may fall again here, right? So this can also be traded, can be sorted here. Here will be our entry, here will be our stop, or here can be our stop just above the DP, and our target can be to the next level, whatever you decide, right? So you understand this phenomenon? Any
Yes.
question? Yes, okay. Tell me. This higher high, this higher high. Okay, fine. Okay. Yes. Okay. Okay. So you mean that okay, I will explain it. So okay, I got what you want to say. Okay. So you mean if price fall directly to here and no pullback was created, right? Like this? Like this? Okay. So what you will do, remember this level, upper level of the box, right? So here, uh, this point, focus on this point, right? So what you have to do, you need to go to lower time frame and find that pullback or kink here, right? You understand? If you go to lower time frame, you will find some pullback here. You may find some pullback here, right or wrong?
Yes.
Yes, you can find some pullback here and you can find some pullback here. Maybe they will be very small. Maybe if you go to uh, if you go to here in lower time frame, you may find very small zone here. On lower time frame, you may find very small zone here, right? And very small zone here, right? It is possible,
Yes.
right? Very small zone. In that case, that will also valid. If you don't find any pullback or even on lower time frame, you will go to the lowest possible time frame. Like if we are on 4H daily 1H, we can move down to as low as 1 minute time frame. If we have data on seconds time frame, we can fall back to seconds time frame and find the king here or pullback here. If there is still no pullback or king here, we will take the whole candle which will be at this line. Whole candle, we can take whole candle here which will be on this line. We will see that in examples, right? Any other question? Any other question, guys?
No, no.
Okay, so now we will do same for bearish side. So price created FL, came back, makes lower low, then price goes up. When price reach to this FL, this has to decide if price has to be pushed down again or the price will go down here, right? Right? So this one, we are at bearish side, so this lower level where the price goes and pull back, we call this DP. This is the decision point, right? And when the price comes back again in future here, it will go up again. What we call this DP. This is the basic way to find DP. We are still in basic version of RTM. When we start intermediate and advanced sessions, and then you will see the detailed schema, detailed schematics of how to find the DP. That is much more complex. So we are here discussing the basic idea about the DP. Whenever price reach to any level, just before it, market movers had to decide if we should break the level or don't not break the level, and this is where the decision is made, is called DP or decision point, right? So this is also possible, the same as it was, the price breaks to the upper line and goes back again, right, and then goes up. So what we call this swap, swap effect, and this is also tradable. We call this swap effect, right? But what happens if this don't comes back to DP? Again same, we will not call this swap FL, we will call this RS. We call this just RS, nothing else. If the price doesn't come back to the DP, then we call it only RS. Only this is only resistance support zone, nothing else. Right? To become a swap FL, the price should pull back to the DP and it is tradable. When price pulls back to DP, we can place entry here, stop loss here, and go for long, right? And when this swap FL, this is swap FL now, and when the price comes back again in this swap FL, we can also trade it given if the swap FL has been retraced to the DP. So we can go long again here with the stop loss below this swap FL or below this DP, and target will be here. This is how we take entry in this schematic. Many were asking if we can trade this FL, trade this FL. This FL tells you about the history, how the price behaved in history. We don't trade usually this. We wait for the break of the FL. We find the DP, we find the swap FL, then use them as the trading zone. That will be our true trading zone, true zone. You may have listened true zone, right? And this is how the true zone is created, right? So anyone have any question about DP or swap FL? Any question?
No.
Okay. So now we will discuss about engulf and fake out, right? Engulf and fake out. In short, we do not write complete, we short in write write them ENG, and fake out we use FO as the symbol. Okay, so now first we will look in bullish structure. So what is engulf? Engulf is simply when the price breaks, in general terms, whenever price breaks any level, call this engulf. Now please mute yourself. Okay, fine. So whenever price cross any level, we call it engulf in general terms, right? Like here it was a level, price goes up, cross this. Whenever this price, when this price cross this line, we call it engulf. So here the price engulf. Then price pulls back and goes up, cross this level, this H level. Again, engulf is created here. Price goes up, comes back, cross this HH level, higher high level. We again call this engulf. So here we see engulf is happening at many places. Like first, this level is broken to upside. We call this engulf. And G, engulf. Engulf happens here. First engulf happened here. We will change the color so engulf, right? Okay, engulf. Engulf, here is engulf. Here is the engulf. Then another engulf take place here. When this high broke into upside, another engulf happened here. And then again, when this higher high is broken, another engulf happened here. Okay. And when price came back and break this FL to downside, another engulf happened here, right? So did you guys understand what is the engulf in general terms? Okay. But when we had to trade, we focus on important engulfs. And important engulfs arise from breaking the important zones. So what are the important zone? In this structure, the most important zone is this FL. You know, FL is important zone. Why it is important zone? Breaking of FL gives us DP and swap FL. Means opportunity to trade, opportunity to enter a trade. So that's why when an FL is broken, we call it engulf in terms for trading. In general terms, every time price cross any level, it is called engulf. But for trading opportunities, we look for the engulf of important zones. So this is engulf. Then what is the fake out? If this is engulf, then what is the fake out? Fake out is also some form of engulf, but that engulf is a trap. How? We will see here. Okay. So here we have seen the price when comes here, it has to decide if we want to go up or go down. So this pull did a little pullback, creates a DP, fine, and then come back again, creates an RS and come back. So here engulf happened, right? Engulf of this FL happened, and here DP is created, right? And here RS is created, right? So what happens in this case, if this, after breaking this FL, if price doesn't goes back to this DP level, this is DP, this is DP. If price don't go back to this DP level in future, when price comes back, it will face in, we have two zones. One zone is here and another zone is here. So what price will do, it will come back and goes back again to this GP. This may react from this RS like this, but then again go back to this DP and then come out and then go down again. So what happened here? Price crossed this level. Do you see this? This purple box. Price crossed this level, but what happened? It went to the DP and fall down again. That means this was the fake out. Fake out means this was to trap the long position takers. Crossed this level, goes back to DP and came down. So engulf happened to this direction, so fake out happens to opposite direction. Remember this. Fake out happens to the opposite direction of FL. And this fake out is what traps the traders. Right? Did you understand the psychology? Price came down, breaks this FL, so it pulls back, what pulls back? It pulls back, goes above this RS zone, but fall down again. So the real direction of the price was to downside, but as the market is zero sum game, so this needed some buyers so they can sell to them and come down again. So that is why market movers take the price to above this level, means fake the price. This movement above was the fake movement, right? Did you understand the psychology of engulf and fake out, especially for fake out? If you did not understand, please ask. This is very important and we will use this throughout the intermediate and advanced level as well. Our whole RTM trading is based on this. Engulf and fake out. Engulf and fake out. This is how the price moves. Comes down, engulf, goes up, fake out, comes down again. When it comes down, what happens here? This engulf this level, engulfing this level, right? Engulfing this level or not? Engulf.
Yes.
This is engulf again. When price cross this level to downside, this is engulf again. What will happen? Again, this like of structure we will have to find out somewhere here. Somewhere here. Right? Somewhere here. We will found the structure somewhere here again. And then again the price will go up, creates the fake out, and then fall again. Right? Here will be some zone like this. Again here will be some zone. Price will go up again here. Fake out this zone, goes up to some zone here, and then another fake out will happen. And this is how the price moves in the market. It goes in one direction to trap the traders and go in another direction, right? So we must find the right side of engulf and right side of fake out to stay in right direction. The whole game of RTM trading revolve around this, right? If you successfully find out engulf and fake out, you will always be profitable. If not, you will be trapped, right? Okay, right. Okay. Yes. Okay, okay. Okay. So you mean if there is no RS, if there is no fake zone in historical point or in back side or left side, then what will happen, right? Okay. So in that case, it will create a fake zone first. How it will create? It will create in the form of can. We haven't studied the can, but I will show you how this will happen. So you mean like this. If there was RS, there was this zone. What will happen if price already hit this TP, right? So there will be a swap zone and there is no RS zone, right? Like this. We have already seen this is the swap zone, right? Fine. Okay. So price will come down here. What has happened? Orders were in this DP, but the price goes back again, hit this, came down. So what will happen? The order will be transferred from DP to this swap FL. We have studied that. Swap FL, right? So now the orders will be transferred from DP to swap FL. Why? The price has hit back to this DP. Do you understand now? Right? So you mean how we will decide how the the fake out will be decided? Okay. So price comes back, engulfs something, right? So what will happen? So what price does if this after engulfing, if this has already hit the decision point, what will happen? The order has been transferred from decision point to FL. So what price will do? It will create a fake level. How it will create? It will create a fake trend. How this will do? Suppose point price has come here. What it will do? It will create in the form of can like this. Price will go like this, like this, like this. Right? Do you see this? In classical technical analysis, what we call this? Price is creating what? Not can in classical technical analysis or traditional technical analysis, we call this trend. Price making high low, higher high low, then again cross high low, high. So what impression this is giving? This giving the impression of the bullish trend, isn't? People draw trend line like this. Have you seen technical analysis, classical technical analysis? People see the price like this, a trend like this, going up, price going up. So what happens? In that case, this will be the fake level. When the price has crossed to this level, this has converted to this level. What price? What will happen? Price goes up. came back, could not break this low, then goes up again, then goes up again. That gives the impression of the bullish trend. So what will happen? Once the price cross this, buyers will enter here, pull back, goes up, more buyer enters here, goes up, and goes to this swap FL. Swap FL here is already true zone. Why? The order had been transferred from decision point to swap FL, and then price fall from here. Now do you see this? Either there was a level in history on left side to fake out, or the price will create a structure where it will give the impression of fake trend. This will be our fake out. Fake out of what? Fake out of this level. Fake out of this level, right? This can be one wave, two wave, or three wave, or just two wave is also possible. This is also same. This is also no problem. This can also be this, no problem, right? This can also be like this. Just one pullback is also enough. Goes up, pull back, goes up. This is enough to trap the traders. Once this level is broken, buyers will think the price is going back up again. So they will enter in trade, but they don't know this is the fake out happening, right? Now you understand? Any question again? Okay. And
Here,
why we, this is why we call this technique reading the market. We are reading
one
the
question.
market.
Here can be
Yes.
created FTR.
What you mean?
Where is you put it fake out? There can be created FTR.
Of course. Of
Okay.
course, we can have an FTR here at this level. At this level on lower time frame, you go, there will be FTR. No problem. There can be an FTR in lower time frame. Do you see this?
Yes.
Do you see this? Even there can be FL as well. How? You see that price goes up, right? Pulls back, right? So what is
Yes.
happening here? There may be a level here. There could be a level here. When price cross this level, pull back, then what happens? An FTR is created, isn't created?
Yes.
When price pulls back again, goes up, this FTR converts in FL, right? When comes back, price may do the same thing again. Price comes back here, and this may create the FL, uh, swap FL again on lower time frame. You see this? Market is fractal. The
Yes.
same
Yes.
thing happening on higher time frame and lower time frame, same structure. So this is the basic building blocks of market structure, and you should focus on this, right? Any other question?
No.
Okay, anyone? No question, right? So we have got the idea of this fake out and engulf, right? Let's see this on bearish side. Okay, so when the price crossed this created the engulf. When price crossed this to upside, this created the engulf. Engulf happened. Price came back to the DP. What if did not came back to the DP? It will create the fake out here. But here we will take the example of the as a can, right? Came back to the DP, goes down, engulf, another engulf happened here. Okay. So now what will happen? Price comes down, goes up, comes down, goes up, comes to this level. What this movement gives the impression of the bearish trend, isn't bearish trend? This will call be a bearish trend. But what is happening? A fake level is created here. If you guys had studied the concept of liquidity, the market needs liquidity to move. So what happens? Either it sweeps or take out the liquidity of left side or the past liquidity, or it creates the liquidity to move in a direction, right? So this fake out, and what this fake out is happening, this fake out is actually the taking out the liquidity, and inducement traders use different terms for that. We use the fake out terms for this, right? So this creates a level here and then fake it out, right? This fake out and then goes up again. So this will be our fake out. Fake out of what? This level. This level. Fake out of this level. Okay. Now you guys understand? Any question?
No.
Okay. So let's see. We will see some. Uh, on first day we looked at the minor FTR and major FTR, right? And we will see this again. Okay. So I will delete this. Type here minor FTR, major FTR, major FTR. Okay. So FTR are two types. Just delete this. Completely delete this. Okay. So when price goes up, goes back, this means there is some resistance. We draw the resistance line here. Resistance is here. That's why price came down. And when the price goes up again, cross this level, pulls back, goes up again, right? Then pulls back, break this level, but goes up again, right? So what happened here? When this came, first time when this crossed, this was our FTR, FTR. This was our minor FTR. But when price goes up, pulls back again, and break this low and goes up again. What happened here? This becomes our FTR zone will be expanded till here, and this will be called major FTR. This is our minor FTR, major FTR. We will see this important. This is very important structure, and you will find it many places, especially when the fake outs are created. Do you see? If you remember the what was the structure of fake out, you remember? Okay. So this was our major FTR and minor FTR. Any question regarding minor FTR and major FTR? When price
No.
cross, pulls back, goes up, but did not reach the target. Remember, every movement has an entry and target. We will study about this in future. We will know if the price hasn't reached the target, only then we can enter in the trade. If price has already reached the target, we don't enter in the trade. If we enter in the trade after price reaching the target, we will stop out. Simple. So what happened here? Think like entry was here and target was, think like this. The entry level was here for this movement, for this move. Entry was here and target was somewhere here, right? So when price crossed this first time, pulls back, goes up, but could not reach this target. Think like this was the entry of this move and target was here. Okay. It could not this to target, pulls back again, break down this the low and goes up again. Only in this case there will be the minor and major FTR, right? Otherwise, on the same time frame, this will not be considered a minor and major FTR, right? So everything is valid, every setup is valid, every entry is valid until the price hasn't reached to the target. Okay, so should we continue today or take some examples, or we continue tomorrow or next week to taking the examples? What do you guys think? Should we continue?
Yes, yes.
Okay.
Yes, very
Okay,
much.
okay. So now we will take the example of DP and just delete this and let's go to the real chart. Okay. Hmm. Here is the real chart. Okay. Let's see this here. For example, we see the price came here, goes up here, came down here. So here we see the resistance. Here we have resistance, right? Here we was a resistance level. Do you see this clearly or not?
Yes.
Price came back, goes up. Here was some resistance, came back, goes up again, breaks this, pull back, goes up again. So what was created here? What is this?
FTR.
FTR. Okay, good. This was our FTR, right? Price goes up again and came down here, goes up again. This was our high. This was our high here, right? High was created. This one was our low or support. And what happened here? This was our higher high created. When this higher high created, our FTR is confirmed. Price pulled back to this FTR and then goes up again, right? When price crossed this and created another high, what we call this?
FL.
What is become? Now this has become the FL, right? Fine. This is our FL.
Yes.
Great. So when the price came back, and this become our FL, right? If we look closely, what we will find, we have another resistance level here, right? This resistance level, do you see? Okay, so I will delete this. This came back, goes up. This was the resistance level, and here, okay, okay, right? Price goes up, breaks here, pulls back, goes up again. Okay, so now we call this H, we call this L, and this zone will be called, what we call this? FTR. This is FTR or not? Here was resistance level, price breaks it, pulls back, goes up again, and creates the higher high here. Here, higher high. Price goes up here. Once the price goes breaks this, goes up, then a higher high is created. What happened? Price pulls back again and goes up again. Look at this. This one is so big and this one is so small. Do you see this? Can you see this? Came back again. Price breaks this. Once the price breaks this upside, this is the FTR. When price pulls back, goes up again, makes a higher high. This is now our FL. This is our FL or not?
Yes.
This one is our FL. Yes, this is now FL. FTR should be deleted now. Okay. So this is our FL. And now, and when the price comes back here in this FL, now it has to decide if price should go up, break this higher high, or should go down and break this low. Break this low. So what happened here? Price came back, goes up, but came down and break this low. So what is building here? This is our, what is this?
In point?
This will be our decision point. Remember, this is our decision point or not?
Yes. Yes.
This is our FL. Price came back, goes up. So now this has to decide if it will go up to break the higher high or not. So what? So decision. So in what zone decision was taken? From this low to this high. This is where the all the decision was made to break this FL to downside. Isn't right?
Yes.
Okay. So yes, any question? Okay. So what happened? Okay. So now you see what happened when price came down. So we call this engulf. We call this engulf. This looks like engulf here, right? But you will soon see the game will be reversed. Price goes up to this decision point, tries to fall back but did not fail. Do you see this or not?
Yes.
See this clearly? So there no swap FL is created. Only there was a decision point was made to break it down, goes up, came back, no swap FL is created. So what instead the price goes up again and breaks this decision point and goes up again, right? Goes up again. So in reality, what was this? This was the fake out, not the engulf. Do you see this? This is the puzzle. This is how the market deceive you in reality, right?
Okay.
So
One
I will
question.
read. Okay,
How to know this is going to be fake out?
the market will tell you what is the fake out. Okay, if you analyze the market from the history, it this you will know that it is a fake out or this is FL. If we analyze it from here, then we will come to a zone here where we will see the price has been engulfed already here. Price has
Okay.
engulfed already here. How we'll know if it is engulfed already here? We will find some zone here and we will use the swap here which will tell us that the price has engulfed to this side. It will fake out to this side and goes up.
Okay.
So how we you mean how we decide if the price goes up? You will have to analyze from here. That is why we do top down analysis. And we are taking the example of today's session. So we are not focusing on whole chart analysis. But when we will do, you will understand. Okay. To
Okay.
understand in detail, we will take some various examples. Okay. Some various examples here. And you will see it from here. Right. Okay. So here, let's out here and our decision point was here. Okay, fine. Focus on this area. Price goes up, came down, goes up. So here we had a level. Focus on here. We are going to do deep down analysis and you will see the example of everything what we studied today. Here it was a level. What we call this? Resistance. We call this
Resistance level.
resistance. We call this resistance, right? Okay. So the magnet is pulling. Okay, magnet is off. We will do this straight. Remember, you draw these things clearly. You don't need any special indicator. You need only drawing tools. But remember, you should draw it correctly. Whatever you are drawing, you will not draw like this or like this or like this. You will draw it complete horizontally. If you are not able to draw, use different tools like the this horizontal line. We will just put it here like this and just increase thickness to 3 pixel. Okay, now this is clearly visible. Put this here using the magnet tool on, it will sit clearly here. So this will draw a straight line, clearly straight line. Remember where we was here. Now we will go to the, here you can see there is no pullback below this line and price goes up, right? Sometimes this happens. So what you will do in this case, how you will find the FTR in this case? So what we will do, we will fall back to lower time frame. We will go to the 1 minute. Okay, and see if data is available. Data is available here. You see there is no pullback below this line, right? You are taking from this is our resistance level. We write our resistance level here. Okay, price goes up, did not come back to this horizontal line. So what we will do, we have data till 1 minute. So what we will do, we will draw this whole candle high to low as our FTR, right? This will be our FTR. You see this? This will be our, this whole candle will be our FTR, right? What happened? This our FTR, price goes up and came down again. Price goes up, came down again, and goes up again. I will write some here. Here what was high, right? And this will be the low of FTR. The whole candle, we took the whole candle. So this is high, low. What happened? Price makes goes up, price makes higher high here, right? So higher high here, pulls back, goes up again. So now what this will become? What this will become?
FL.
FL. This will become our FL. So this is now the FL. And then again price came down here, goes up. So now what this has to do? This has to decide if price go above this higher high or breaks the low, this low. Here is low, break this low to downside. And what happened? Price goes up but did not cross this higher high to upside and fell down from here. From here to here, what we'll call this then? Okay, this is the DP, right? This will be our DP. We call this DP. Okay. Then when the price came back here, focus on this. When the price came back here, okay, right. So here we look at this DP. So when price came back here, it goes up to the DP, but if you see, this could not go deep inside the DP. Do you see this? If we divide this DP in 50-50%, 50-50% area, so do you see the price goes up? This the just entered to bit something 20 to 30% area, then fall back again. This happened
Yes.
Yeah,
or not?
barely. It barely went in, barely touched, and
Yes,
then traded
just
down.
touching.
Mm.
Yes, this is touching the just the below the 50% of DP, right? If this DP is you say 0 to 100, and if we draw a line and divide it in half, then you will see that it goes up, touch the DP, but did not penetrate to the around 50% area of the DP, right? So
Yes.
what we call this? We will call this RS. We call this, this is the RS. And what happened here? Engulf, right? We engulfed here. This goes up, came down, then goes up again. Remember the structure? This creates lower low, and this creates our low, lower low. This was the low, breaks this, makes engulf, creates lower low, pull back, goes to here, then fall down again. This creates the RS. So what happened? The this was engulf, came back, makes another engulf here, right? And here we have another zone here. We will discuss them in past, in future. As going too deep to past, it will confuse you. So focus on this structure only. Price came back here and goes up again and fake out to this level. Do you see this level? Do you see this? Goes up
Yeah,
and
yeah,
goes up and
sure.
fall down again. Here we fake out it, right? Fall down again, right? And what would have happened here? Those who don't understand what is going there, what they will do? They will see, oh, the price is crossing this level, they will enter here. Price is crossing this level, they will enter here. Price is crossing this level, they will enter here, and then trap, right? especially here. They see this high, low, price goes up, cross this high, they entered here. That's why the goes up, price goes up, fake down, and cross this layer. Why? The direction of the price was
Yeah,
this, right? And
yeah,
I have
yeah.
a question.
right, if you look at here, what happened here? Actually, you can guess where the traders were trapped. If you see this, after going down, price goes up and fall down this zone, this area, right? Price goes up, fell down from this area, and fell down this heavily. If you look at what happened, see. So that means this was very good fake out, and especially traders added entered here. That's why when price fell down sharply and goes back again, they knew that way they entered in wrong direction. That's why yes, they sold here, and they sold here. Price fell again here, goes down. They pull out of the market, right? Okay, any question?
And clearly it's on the downtrend, is it?
Yes, it was here. You can see once the FL is broken. Why
Mm-hmm.
FL is the important zone? Once the FL is broken, the price is clearly going to the next FL. Price,
Mm.
right?
Right. So even though it tried to come back up, it really wasn't strong enough, and you can see with the heavy candle going down.
Yes, yes. Any other question?
Mm.
Yes, one question. And in
Yes.
the DP, we can same trade as multiple times till the DP break.
Yes, DP, okay, I will explain this in future, but as you have asked that question,
Okay.
every zone has two important zones, right? One is called RS, one is called FL. One master said in this exact line, if I can remember, he said, every zone has the first line of defense and last line of defense, right? First
Okay.
line of defense like this, I will explain it here a bit. Uh, take this DP, okay? We will focus only on this DP. I will delete all this so this will not distract you. Okay. So this DP, take this DP only. I will also put this here. Okay. I will delete this. Focus only on this DP area, nothing else. Okay. So this DP is also some type of structure. Do you see this? Price came back, pulls back, goes down, goes up. Right? Do you see this?
Yes. Yes.
Okay. So this also have many zones here, many zones here. Okay. So if we focus only on this box, okay, I will pull this DP. We will pull this DP to upside. So we will focus clearly only in this DP zone. Okay, right? Okay, when the price entered in this DP zone, remember when the price entered this DP zone, what was there? Last time price goes up from here. Do you see this?
Yes.
Last time price went up from here like this, right?
Yes.
Okay. So what was there? A level.
So,
Was there a level or not?
yes. Yes.
It was, you can say, this level. If we look to the left, if we go its left like this, we will find a zone here from where the price bounced to upside.
Yes. For FTR.
Yes, it was an FTR. When this cross, it was an FTR. It was an FTR when the price crossed. this level, this level,
Yes.
right? We are zooming out, zooming into, okay? So when the price crossed this area, we created a FTR here, right?
Yes.
Price cross, pull back, goes up, came down again, and goes up again, and came down again, and goes up again,
For
until
FL.
this,
Yes.
until and this converts into the FL, right?
Yes.
This is FL. Until the price is broken, this to downside, this is still our what?
FL.
FL. FL.
Yes.
Okay. So when price breaks down to this area, so what happened here? What this created? This
This Engulf.
created a RS zone here, right?
Yes.
RS zone here.
Yes.
Here our RS was created, and this did not reach to this DP area where this is where price fell. And if we can go to the lower time frame, this decision point will be somewhere here, right?
Yes.
This is FL. If this is FL and this is the RS, then where is our DP for this structure? It will be
This up.
somewhere here.
Yes.
It will be somewhere here. Our DP will be somewhere here. Yes. So what
Yes. It's
happens?
clear.
Price goes up, fake out this zone, right? Fake out this, goes up and came down. So what happened here actually? Understand what happened here. When price fakes out, whoever goes up here, whoever bought, you see this green candle, green candle,
Yes.
green candle. So green
Yes.
candle means what? Those guys were
Good.
buying there, right?
Yes.
All these green candle means they were buying there. So what will happen? Focus on above on this level. I'm deleting this DP. Okay. So focus on this area. Only this area only. I will give them different. Okay. So this area, you see this filled yellow color,
Yes.
this yellow zone. So whoever bought in this area is stuck here, right?
Yes. Yes.
So whenever in future price comes here, this we call this MPL zone. MPL means max pain level.
Next
When
level. Yes.
price when price fell down from here, they are in pain, right?
Yes.
They bought here, but price fell down. Say must be so they must be waiting for the price to come down to this level so they can get out of their position. Not every trader used stop loss. Those using stop loss had already get out of the market, but those big guys who are not using stop loss but still in pain, what why they are in pain? You looked at why they are in pain. They bought here, but the where is the price?
Mm.
Price is
Very
fell,
high. Very
price
high.
price fell here, right? So
Yes.
they were
Yes.
in pain. So what will happen when the price reach again to this zone? What they will do? They will try to get out of the position. And what happened here? Do you see this? Do you see this? What happened? Price goes up again and they exited the market. And what
Fall.
happened? See this fall. Use fall, right? Use fall, right? So MPL zone gives you the biggest risk reward rate. So what happened is when the RS is created in such a form, when the fake out is created in such a form, so what was the structure of the fake out? The structure of the fake out was like this. Price came here, break the FL, goes up, came down, then goes up again and came down again. Right? This is what happened. If we take this structure here, understand what happened. Look at here. This is what happened in the price. So this one, this zone, okay. So this one, look at this. So what happens? This one, above this one, we call this MPL, MPL, right? This will be called MPL,
Yes.
MPL, okay? And below this, it will be called RS. Below this line, this will be called RS. We call this uh, RS. RS means support resistance zone, normal support resistance zone, like uh, uh, classical technical analysis trade, right? This
Okay.
one will be called RS. So here it was the RS. Normally, what happened if we talk in terms of the zones, what will happen? This will be at this level where this cross the price like this. It will be most of the time here, here, and here, right? We will study when we will study in deep at intermediate and advanced level. You will see we will breaking down the Jones and goes down, down and down, right? So
Yes.
what
Yes. Got
happened
it.
here? If we look at here and we draw this above this, it was MPL zone, and below this it was RS zone, right? So RS zone, what happened?
Yes.
Price fell down, price fell down, right? So RS zone was here. If you look at this line, like we said, if we look at this line, okay, like this, like we draw it here, here. So this line, and if you see this, which candle crossed this line? We are already on lowest time frame. So what will
Yes.
happen? This will be our RS zone. You see this?
Yes.
Is also our RS zone. Price fell back, goes up to this RS zone or DP zone. This is also a DP zone. Remember, this is a DP zone also. We will study it
Yep.
in later. Okay. DP zone, price goes back, fell down. And when price goes back to this zone, orders are transferred to here. Now our orders will be transferred here. Do you see this? Orders are now transferred in this zone.
Yes.
This zone, that's why when price came back here, goes up, this fell from the this zone. But why the price goes up again and cross this high? Why? Because this is due to this did not took the MPL. If you remember, the formation of MPL same as the we did in the DP area. We delete this so you can see this clearly uncluttered, right? Focus only on this area.
Okay.
Price goes up, came down, goes up again and cross this area again, right? Why this happened? Focus on this zone, okay? Here, the same structure is here. If you look at this, price came down till here, goes up, came down, goes up. What this created? Fake out structure goes down, right? So
Yes.
what is this? So where is the MPL? MPL will be here. Do you see this?
Okay.
This MPL is here. If MPL is here, you see this? What happened? The price goes up but did not touch the MPL. Do you see?
Yes.
MPL was still left, still fresh, still vacant. So what happened in future when price goes to the MPL? It fell sharp again. Do you see this?
Yes. Got it.
Yes. Do you see this? So when we have to trade the MPL, if we are trading the MPL, what will happen? We will entry here. Stop loss this above the zone our right, and what we will do from where the price came from here, price came from here to this zone, so our target can be here.
Yes.
So this is 1 is to 17 risk reward trade, or at least it can be to the our origin. At least it will be our origin, from where the origin we will study the origin and origin FL and RSFL in future. So
Okay.
this can be at least till here. So this is 1 is to 12 trade, right?
Yes.
You see this, and this, if we taking, if we talk about this trade, we'll delete it, and right. If we look at this MPL, this MPL, okay. If we look at this MPL, this DP, MPL inside this DP, and draw this here, and go in here, look at this, okay. So what will happen? This came back to the MPL, price goes up from here, right? So if we trade this one, this will be our price goes up from here. So at least our target should be here, right? Our target should be here till here. What will be our risk reward? Our risk reward is 1 is to 33. Do you see?
Yes. Huge.
This risk reward ratio is 1 is to 33. This is how you know how to set the target. If you know from where the moves are coming and from where this is the rising, you can analyze first on a higher time frame and then go back to lower time frame to find these things and trade accordingly. At least our target will be till here. Why? This is this for this move. Look at for this move from here to here, right? For this move, our origin is here. At least price goes up, pull back and goes up here. So at least target, our least target should be here. Here. So if we talk about this, so this is still our 1 is to 25 trade like, and this goes up and fell sharply. This did not take too much time. If we count in terms of the time, so it took only from here, uh, from here to here. How many bars? 49 bars. 49 bars, 49 minutes. 49 minutes means this was just this happened in just 1 hour. You end from entry to exit, you held this trade for just 1 hour and made 25 hour. 25 hour means if you took 1% risk of your capital in this trade, you made 25% in 1 hour, right? This is what happens when price reach to MPL. Have you seen two examples of MPL, right?
Yes.
Okay, so for today, enough.
Okay.
We will continue tomorrow and take some more examples. Not tomorrow, next week Saturday, right? Tomorrow means
Okay.
next. Okay, remove all drawings. सभी drawings हमने remove कर दिए. Okay, all drawings are removed. Okay, fine. Let's close this today. And those who have recorded the session should convert in 720 pixel and put the LinkedIn profile link and then upload it. Okay, fine. Close this session
Okay.
here.
Yes.
Okay.
Yes. Thank you.
Thank you very much.